Welcome back to QAV. This is 616. We're recording this on the 18th of April, 2023 Australia time, which makes it the evening of the 17th of April, 2023 in Savannah, Georgia, where my wife's mother-in-law is from, I believe. Chrissy always keeps telling me, I have to take you to Savannah. You'd love Savannah. And it's where Tony Kynaston is at the moment. TK, how you doing? How's your trip going?
Good. Yeah, I love Savannah too. It's a student town. The SCAD, the South Carolina Arts and Design School is here.
Hmm.
So it's good, yeah. And it's
And
got lots of architecture in it.
does everybody talk like this?
Lots of Southern charm. You all have a good day.
I've always relied on the kindness of strangers.
We've been going around doing this. Every time someone talks, we go, mm-hmm, mm-hmm, after every sentence.
Oh, I love it already.
We'll have a good day. Mm-hmm. Mm-hmm.
Now, since it's been a couple of weeks since we've done a show, since then, I think you were in Vegas last time. You went
Yeah.
to watch the Masters.
Augusta, Georgia. Yeah.
Who
Good
won
old.
the Masters?
I'll have to think now. Who won the Masters? Shit, that's been a couple of weeks ago.
Wasn't
I
Magnus
forgot.
Carlsen then?
No, hang on. I should know this. I was there. Oh, John Rahm, of course. John Rahm. He
Not an
walked it.
Aussie?
No, Spanish.
Oh,
He
okay.
was the spirit of Seve Ballesteros. Who would have turned 66 on the Sunday. It was his birthday, but he died of brain cancer about 4 years ago, unfortunately.
Well, he was a golfer.
Seve Ballesteros was my favourite golfer growing up. He was a very gifted Spanish golfer, just intuitive golfer, could hit a ball from anywhere, out of a tree. Won a big tournament by hitting it in from the car park one day.
Hold on a second. He was 66. He would have been 66. You just turned 60. When you
Mm.
said you were growing up.
Well, yeah, I mean, in my teens, he would have been just starting out when I was probably about 14, 15 or so. I didn't
Oh,
play
okay.
golf until I was 20, so he would have, sort of started taking interest in,
Right.
yeah, around that sort of age, and he was established as a pro then.
Right. I think you're already growing up by the time you're 20.
Okay,
I was thinking
all
you're
right.
like a 5, and I was like, oh, he was like 11
Well, when you're
later.
60 and you say when you're young, that can be any time up to 30, I think, probably, maybe 40.
Right. Okay.
Yeah.
So was
No,
it
it's been
good?
great. I mean, yeah,
Was it your
Augusta was
first time
fantastic.
being there
No,
during
second
the
time.
watching a Masters?
And funnily enough, I saw a Spanish guy win that in 2017 too. Sergio Garcia won
Right.
in 17. So next time I go to the Masters, I'll back the Spanish golfer.
Yeah, although the Spanish golfers will be checking to see if you're there.
Yeah,
It's obviously you're the
that's
good
right.
luck charm. Yeah.
Yeah. Yeah. So I mean, Augusta's an amazing place. It just lives and dies for the golf tournament. It's brings so much money in, and there's not much else there. It's a pretty poor area overall, really, and it's a bit of a rust belt. We were shipped around in buses the whole time, and a couple of times we took some back roads, and there were just all these boarded up textile mills we drove through one day, just literally,
Owned
you
by
know.
Berkshire Hathaway.
Well, that's what I thought of, but they weren't. But they were just, just left. Basically, they were just, people had thrown rocks through the windows, and it's almost like someone just turned the lights off and left one day and left them standing.
Yeah.
Yeah, yeah. So pretty poor, and lots of. Well, actually, speaking of Berkshire Hathaway, one of their businesses is demountable homes, and there's lots of those prefabricated homes around the South in America, where
Yeah.
the truck parked in the front yard's worth more than the house that they live in.
Mm-hmm.
Mm. Mm-hmm.
Wow. Mm-hmm. And then what are you doing in Savannah?
Yeah, so we're making our way down to New Orleans. We had a week in Hilton Head because I love it there, which is only 3 hours away from Augusta. So Ruddy and another mate of mine, Jeff, drove down there, and were joined up by a US buddy and his mate they came across from Nashville. and we played golf. And a friend of mine owns a 6-bedroom house in Hilton Head, so it's always good to stay there. So he pitched tent there for a week and went to the PGA again yesterday there, which was much more relaxed than the Masters, even though all the John Rahm was playing there too. So much more accessible and up close. But that was good. Played golf a couple of days, which was lovely. There's like 50 golf courses on Hilton Head Island. So it wasn't hard to get a good round in there, and lots of good food, lots of good seafood. Yeah, so just actually been quite busy. I'm getting quite weary because we've just been playing golf and walking courses, and then we even hired some bikes and went for a ride around Hilton Head along the beach, and that was a good workout. And yeah, it's been good. Been good. And then
Ruddy.
down to Savannah. Savannah's where basically the international airport is for Hilton Head, so that's about an hour away from Hilton Head Island. And Jeff flew out today. He's going back to Australia. So it's Roddy and I for a week. And then on Sunday, I fly from New Orleans up to Toronto, where Jenny and Alex will join up. And we'll
Oh,
spend the
they're
weekend.
meeting you in Toronto. I didn't know that.
Yeah.
Oh,
Yeah.
fantastic.
Next week. Yeah. So I think Alex has to tell you she may not be able to do a download the next 2 weeks.
I'll have to.
Good thing you're in Brisbane holding the fort for us.
I'll have to review her contract.
Mm.
How's Ruddy? He got over his COVID?
Yeah, he's good.
You didn't get it?
I didn't get it, no. But although I've been sniffling for a week or so now, everyone's got sniffles and coughs and things, and you get on a bus with 40 other guys and everyone's sniffling and coughing and stuff. So, but no, I haven't got it. I've been healthy, been good.
That's good. Well, it sounds like you're having a fun time. I'm really.
I am. It's great. Really enjoying it, and lots of different things too, which is good. Vegas, and then we stayed in a place called Aiken, which is half an hour away from Augusta, and that was different. That's real American suburbia. We had.
And where did you stay in Vegas?
We started off in the Aria, which was a really nice hotel, and then went to the Mandalay Bay, which was more of a sort of family sort of hotel, huge place, which was good. That was fine too. Right. Went and saw Penn and Teller, which was fantastic.
Yeah.
And the Beatles Love, the Cirque du Soleil Love, which was great.
Which we saw, when were we there together? 2017?
Yeah, I think so.
2017 we saw that. Yeah.
Yeah. And it was changed. I mean, it's essentially the same show, but it's changed enough to keep it interesting. That was good. Yeah, Vegas was good. Lots of the golf courses around Vegas were very diverse and spectacular. So we had a couple of rounds in Vegas and around Vegas. One day it snowed. It was that cold. We got snow on the course. And then went out into the desert, went out to a place near Death Valley and played there. And so it was like, it's this sort of artificial oasis on some days where it's surrounded by rock and cactus and just the fairways are green. And then other days you're playing through canyons out in the desert. It was spectacular. Very, very varied. It was lovely. So Vegas, I could recommend the golf courses around Vegas. And then Augusta, we actually had some really spectacular golf in Augusta too. We played on Augusta Country Club, which is next door to Augusta National. So one of the holes shares Rays Creek. If you're a golfer, you'll know Rays Creek. It's part of Amen Corner at the Masters. So we were on the other side of the fence to Amen Corner. And you could hear the crowd roar, and it was pretty special. Similar sort of golf course.
In your head, they were roaring for you when you.
Yeah, go home. So that was special. And then we played a place called Champions Retreat, which is where apparently all the golfers go for holiday houses and things around the area, and played there. That was really good. So some good golf. We played 3 rounds of golf in Augusta, lovely golf courses, and then down to Hilton Head, and that's been lovely. And now Roddy and I are going down to Jacksonville. We're just going to wing it between Savannah and New Orleans, see what's at Jacksonville. And then we've been told to go to the Redneck Riviera, the Pensacola in Alabama on the way through. So we'll do that for a night too. See what that's like.
And then you go to New Orleans, which is one of my favorite places in the
Is it
US.
really?
Oh yeah, I've been there many times. Never been with Chrissy. We always talk about going, but back in my Microsoft days, we used to have our annual conferences in New Orleans because it had this big sort of conference center that you could fit 40,000 Microsoft employees in, and got to party there, many times. It's a great city to just. I remember just walking down in the French district and just going into these little bars the size of, your bedroom, and just seeing 3 or 4 blues guys that all look like they're in their 90s, these black guys just sitting in his little bar playing the blues like they look like they've been doing for 85 years. And it was just magical. Yeah. They're probably all gone now, but and after Hurricane Katrina and all that, I don't know what happened to all those guys, but this is back before those days in the 2000s.
Yeah.
It was wonderful, really wonderful experience. And jumping in, and seeing the jazz bands there and the blues bands, really great.
Yeah, looking forward to that. Yeah. So I'll spend a couple of nights there with Ruddy and get into that.
Make sure you get down to Treme. Get down to the Treme district where all the music is.
Oh, okay. Okay. That's the HBO series, wasn't it? Treme.
Yeah, that's what it was set in. It was set in the Treme district. So you've got Bourbon Street where all the tourists go, in the French district, which is great. I love that. But you get to Treme, which is where the real music is.
Oh, okay.
Your skin color might set you apart, but just
yeah, we've had a lot of warnings about walking around after dark in New Orleans.
Yeah, you're rich. You'll be fine.
Yeah, well,
rich white people they get along fine. You'll be right.
I'll give them Ruddy. I'll sacrifice Ruddy.
Just make sure you have better running shoes on than Ruddy. People might be wondering, why am I listening to this? I thought this was an investing show. Well, this is what you get to do if you're a successful investor: is just take 6 weeks off and go play golf.
Yeah, no, exactly. I think I've played about 12 rounds of golf in the last 2 weeks. It's been full on.
That's great. I'm really happy for you. Well deserved. Well, we should talk about investing at some point. How's
the market going back there? I haven't really kept in touch with it.
It's had a great couple of weeks. You should go away more often. I keep saying that. Whenever you go away, we have a great time. Yeah, the market has had a great couple of weeks. Obviously, just opened 20 minutes ago. So the Fin said it was going to take a bit of a hit today, but in the last couple of weeks, it's just been going gangbusters. Let's start with maybe a portfolio update. The dummy portfolio since inception, which for new listeners is 2nd of September 2019, when we fully invested our original $20,000 in capital in the dummy portfolio. It's up 18.09% per annum over that period. Which is pretty much right where it should be.
Yeah, that's right.
Versus the benchmark, which is the SPDR 200, the codename STW, which is up 7.67% per annum over the same period. So, yeah, kind of doing 2.5 times the index, which is nice. For the financial year, which is a couple of months away from closing. Dummy portfolio is up 11%, 11.03 per annum. Actually, no, 13.94 per annum. I don't know. Navexa gives me two numbers, one on the chart, one on the result. The result is 13.94% per annum. Versus the STW up 17.76 per annum for the financial year. So, again, we're not doing as well as the benchmark this financial year. It was a tricky one for us, but, we're not that far behind, and we've been catching up quite a lot in the last couple of months. and up 14% for the financial year, which still has a few months to go. Not a bad result at all.
Yeah.
I'm quite happy with that.
Yeah, good. I am too. And it doesn't worry me that we're underperforming the benchmark in the short term. As you say, in the long term, it's that's the game to watch. That's the
Yeah.
game to.
With the buy list this week, one of the things to note is that copper is a buy again, which is normally exciting. However, one of our favorite copper stocks that we've done very well out of in the past, C6C, Copper Mountain, has announced it's being acquired pending regulatory approval, et cetera, by a company called Hudbay. So no, I mean, people who own it, congratulations. We don't, because copper, I guess it was a sell at some point. But it had a big spike in the last couple of days with that announcement. C16, I think we got a question about what to do if you are an owner of that later on. We'll get to that in the Q&A section. What else? Max put me onto an Aussie guy called The Chartist on Twitter. You ever heard of The Chartist, Tony?
No, I haven't.
He apparently just uses charting and has a 20% average CAGR as well. Max suggested we invite him onto the show for a chat. I'll get around to that at some point. But I started following him on Twitter, and he's got this great quote I saw from Phil Jackson, the coach of the Chicago Bulls. Wasn't he the Chicago Bulls guy, Phil Jackson?
I don't know. Sounds familiar, but I'm not sure.
I think that's who he was. Wasn't he Phil Jackson, okay. Chicago Bulls? Yes, Chicago Bulls during their sort of good years. Quote from him that I really liked, which was, "The most we can hope for is to create the best possible conditions for success, then let go of the outcome." And I thought, yeah, that's sort of a good definition of QAV. We just create the best possible conditions and then let it play out. Don't
have
think
a
too much
framework.
about it. Yeah.
Have a good framework, exactly.
Yeah.
Yeah.
What else? Oh, Buffett. Buffett gave another great long interview with his favorite journalist at CNBC. CNBC? I think so. Becky. He was on Becky's Squawk Box show talking about bank executives. I've got clips from the show that I could play, but basically he was talking about the recent bank collapses over in the US and was reflecting in large part what you've been saying, that it's not the same really as it was back in 2008. The investors are okay. Some of the investors in banks are going to take a hit. But he's talking about how the FDIC is going to cover the investors and
the depositors.
Sorry, the depositors. Yeah.
Yeah. Yeah.
And that it's not costing the government anything. And so people don't understand that and shouldn't worry. There was this quote, though. He said, "All kinds of trouble was caused by the banks, but bank executives all continue to live fine. They may have lost their job, but they got their pensions. There have got to be consequences for the people who make the decisions. Penalizing the shareholders later on by billions of dollars worth of fines, that doesn't deter the bad action." He said that some of these CEOs should go back to living like a person that works on the production line of Ford or something like that. They don't deserve anything special. But she asked him in the interview whether or not he saw it coming. And he said, yeah, he goes, I read the financial statements of all of these banks. Obviously, Berkshire have had investments in a lot of banks and they sold out a lot of them, I think, not that long ago. He said, but he could see all these losses going on in the bank's financials. And he said something like, if Berkshire lost $28 billion or something in a year, we would probably talk a lot about it in our earnings call. He said, but they were just, barely mentioning it. It was just sort of being blown off in these earnings calls. He said it's kind of this crazy stuff that they're doing and crazy thinking. So anyway, anyone's interested in Buffett's thoughts on what's going on with the US economy and the banks, check that out. You can see clips of it on YouTube. He's
I
always
did
interesting.
I did see last Monday, I think it was, he did a 3-hour interview on Bloomberg from Japan.
Right,
I didn't see it, but I saw it advertised. Apparently, he's bullish on Japan. He's been buying up a lot of Japanese companies recently.
right.
Hmm.
Good stuff. Well, he's always fun to listen to. Doesn't pull his punches. Pulls them a little bit more than Charlie does, but still.
Well, he's dead right about the banks, though, or any company really, and the CEOs get off scot-free. It's just complete moral hazard, especially with this latest round of bank collapses in the States. The government's just come in and swept up everything, paid the depositors out, shareholders get burnt, but the CEOs walk away.
Yeah.
That's
Yeah,
right.
it does seem wrong, doesn't it?
Hmm.
But that's American capitalism for you.
Yeah, and Roddy and I were talking about it tonight at dinner. It is different over here. Like it's much more entrepreneurial, but then the market's so big, you can have a lot of success with even a moderate or a small company. Really, there's just so many people here who need servicing. It's different to Australia, I think, where your market's much more limited.
Yeah. Well, that's all I've got to talk about. You got any news you want to get into?
No, not at all. Like I said, I've been turned off from the markets for a couple of weeks now. I'm playing golf. It's been lovely.
Good. But you do
Yeah.
have a pulled pork to do, I believe.
Yeah, I do a pulled pork. Someone asked the question for a pulled pork on mineral resources, which I'll do.
Okay.
So, okay, I'll do that one now. Uh, it's not a company I follow. I mean, I've certainly watched it over the years because it's been an exciting growth stock in the mining sector, but it's not on our buy list. I'll say that from the outset. It started off basically as a service company to the mining industry. It was crushing rock, and they still do a lot of rock crushing, basically. I guess that's part of the process, I think, particularly with iron ore, to get things ready to be exported and to extract some of the ore from the rest of the rock that they mine. But it's the company now, Mineral Resources, has expanded into other areas. It's now an iron ore miner of its own, and it's now getting into lithium mining and has some joint venture in that space, and also gas exploration. And they're currently trying to take over a company called Norwest Energy, which has a presence in the gas space. So from what started off as a relatively small mining service company, it's grown fast over the last, I don't know, 15, 20 years, I guess, that I've been aware of it. And it has an owner-founder by the name of Chris Ellison, and he's certainly very entrepreneurial and dynamic and has been driving growth in the company. And it's growing fast. I mean, revenue in the last 12 months is up 74% year on year. So certainly has a high growth profile. But that's one of the reasons why it's not on our buy list. Right off the bat, the prop cap for this company is 22 times cash flow. So, we're looking for companies less than 7 times cash flow. So you're certainly paying for the growth that you're getting in this case. So to run through the numbers, it's a large stock. So ADT is $68 million. I'm doing analysis on the share price of $79.13. I think it's a little bit higher than that now. This is a day or two old. But $79 is still less than the consensus target, but it's well above our IV1 and slightly above IV2. It does pay a dividend, but the yield's 2.78%, so we're not going to score it for that. Stock Doctor Financial Health is strong and steady, so it gets marks for that. And certainly it's a well-managed company. Net equity per share, however, is $18.25. So share price being up around $80, it's well above its book value and book value plus 30. So from a valuation side of things, we're never going to look at this. This is a growth company, and people are paying for that. Forecast earnings per share growth is 76%. So even though it's grown by that kind of number in the last 12 months, it's forecast to keep growing by that kind of number. So, it's doubling every 2 years based on its current trajectory. So it's certainly growing. Growth over PE, we score 2 for. It's 3.73, and our hurdle is 1.5. So even though it's growing fast, even though it has a high PE, the growth is certainly still, I guess, making it attractive on that metric. And the PE is 20.6 times, so it's quite high. And it's not the lowest in the last 3 years, so we can't even score it for being the lowest PE for the last 6 halves. Equity has been increasing, but not consistently, so we give it a 0. There was a period when it did fall backwards, and that's not surprising for a company like this. They are taking on debt to fund their growth, not just from cash flow, although a lot's funded from cash flow. So all in all, the quality score for this one is 64%, but the QAV score is only 0.03. And it scores low for us based on the valuation side, I think. And this is a classic growth stock. I mean, it's got the same sort of, profile in terms of its price as an internet stock does, or Afterpay did last year. So it's priced to perfection, and that's the issue I have with a company like this. And I think it's being caught up in the lithium mining boom as well, which is certainly it's about a quarter of its business now, and it's certainly one of the areas which has sparked interest with people. Again, whether that continues on or not is I don't know, but you're paying as if it will continue to grow based on a 20 times price or PE and 22 times cash flow that you're paying for it at the moment. It'll take you a long time to get your money back, especially if that growth profile slips. And that's one of the issues I have with buying these growth stocks. They're great when everything works, but it doesn't take much to knock a company off a growth path. If interest rates keep rising, or suddenly hydrogen-powered cars become more popular than electric-powered cars, and lithium might not be as valuable. All those kinds of things get thrown at curveballs when they're priced to perfection. So that's one of the issues that I have with these kinds of growth stocks. But certainly in the last 12 months and projected for the next 12 months, it's going to double in size. So good luck to them.
Thanks for that. One of the things that I plan on using AI to do in the next couple of months is try and figure out a QAV style model for growth stocks.
Yeah, right.
See if it can come up with something that checks all of our boxes.
Yeah, well, I hope so, because the companies themselves are attractive when they're growing. The problem is the price you have to pay for them.
Yeah.
Just you're buying future earnings a long way down the track, and if they don't get there, the share prices come tumbling down, and you've done your dough.
Yeah. We've talked a lot over the years about figuring out a valuation model that makes sense to you for these sorts of stocks, and you've had a couple of attempts at trying to figure out how do you get in, and then when do you get out, and how, what kind of rules do you set around it. And we've never heard anything that made sense on the surface, but maybe AI can work it out for us.
Yeah, but for me, it makes sense on the way up. Like you always get drawn to it because it takes, these growth stocks can do really, really well for 2, 3, up to 5 years, but it's the crash when they go up the stairs and down the elevator, and it's that last crash which can destroy a lot of value.
Yeah, and it's knowing when to get out. What are the metrics for when to get out? Because like everything else, they don't go in a straight line up. They go up, they go down, they go up again, they go down again, they go up again. Yeah. All right, thanks, TK. That was a question from Neil, asked for the min pulled pork. So hope you enjoyed that, Neil. Next question's from John. Wondering if TK could do a pull pork on the next new buy that comes into the buy list with an ADT over 100K. The higher up the list, the better. Well, according to our buy list for this week, that would be the NAB, Tony.
Is that right?
Yeah.
Okay, I can do a pull pork on NAB for sure. Yeah.
It's not very high. Like it's come in sort of around 34, obviously as a big ADT, around what is it? 131 million, 131 million, I think. The next one is STO, Santos, back on the buy list. But crude oil is a sell. So, I think no, crude oil's a buy. LNG's a sell. And according to my chart, Santos is more LNG than crude oil.
It is,
right to you? Yeah.
It does, definitely, yeah.
Right. So it's not really a buy for us at the moment. So maybe NAB is one to look at next week.
Yeah, I think the banks are interesting at the moment. They should be, and they are making money while interest rates are rising because they're passing on the deposit rate rises slower than they're passing on the mortgage rate rises. But I think there's a lot of sentiment out there against them because there's still this theory that we might go into a recession in the future and that'll hurt the banks. So, yeah.
That's certainly it's getting a lot of media attention over here at the moment. I think front page of the Fin today, or at least online, some economists saying the RBA doesn't know what they're doing and we're going into a recession and et cetera, et cetera, et cetera.
But there on rates, I noticed. I think the RBA met just after I left and decided not to increase interest rates for at least another month.
Yeah.
Yeah. So he's probably playing for his job now. So might finally be heeding the calls to not raise rates.